Greetings of the day, everyone. This is Narendra Nimmala. Today, I'm here to discuss certain important topics under e-way bill provisions. We all know how important e-way bill provisions are given the ramifications it has in case there is any non-compliance. Even it may be minute non-compliance, but the penalties are huge. Therefore, we thought we'll discuss some of the important topics, some covering the penalty provisions as well. So the first topic that we picked for discussion today is with respect to section 129. We all know that there has also been a change uh, effective from 1st January 2022. More than 50,000, if the value of the goods is more than 50,000, along with the movement of goods, the transporter is required to carry an e-way bill. Along with the e-way bill, a supporting document, either an invoice or a delivery challan, needs to be carried along. However, not many of us know what are the implications if that procedure is not followed. If there is no e-way bill or if there is no accompanying document along with an e-way bill, what happens? That is where section 129 comes in. And in section 129, there has also been an amendment which we'll be discussing now. So to understand this topic better, we've split it into two scenarios, wherein in the first scenario, what happens if the owner comes forward to pay the penalties, and in the second scenario, what happens if the owner does not come forward. Like we all know, there is owner of the goods, and then there is a transporter who actually transports the goods from place A to place B. In the first scenario, we'll discuss what happens when the owner comes forward in case there is any detention of vehicle and the goods. In case the owner comes forward, if the goods are taxable goods, then under earlier provisions, tax and penalty equal to 100% was payable. Tax of 100% and penalty of 100% was payable. However, post amendment, 200% penalty has been prescribed. Why? What was the requirement for this particular amendment? What was the need for this particular amendment? Was mainly because under the earlier provision, there was ambiguity as to whether the tax that is to be paid under 129 in case there is any detention was over and above what was required to be paid on the goods itself. Suppose the goods are worth 1 lakh and the tax, of course, on that, assuming it's 18%, it's 18,000. Everybody pays 18% tax on that 1 lakh. However, in case there is any detention, another additional 18,000 and 18,000 of penalty was required to be paid under section 129. There was ambiguity because I've already paid 18,000 that is applicable on the goods, whether the tax that I had to pay under 129 was over and above what I've normally required to pay, was the ambiguity. That ambiguity was also enhanced by the fact that under section 17.5, the taxes that have been charged under 129 are restricted. Therefore, all this led to a lot of ambiguity between the taxpayers, and therefore there was a need for amendment, and therefore this particular amendment has been brought in, wherein now the taxpayer, in case there is any detention of goods and you do not have supporting documents or whatever be the non-compliance, then you are required to pay 200% of the tax payable. In case of exempted goods, there is no amendment. It's very simple. Even if in case the owner does not come forward, the law is very simple. There is no amendment. In case of exempted goods, 2% of the value of goods or 25,000, whichever is lesser, is required to be paid if the owner comes forward. If the owner does not come forward, 5% of the value of goods or 25,000, whichever is lesser. What happens in case owner does not come forward in case of taxable goods? Then under the earlier provisions, tax and penalty equal to 50% of the value of goods reduced by whatever taxes that I've already paid. That can be reduced and the balance was required to be paid. Now again, similar to the case we discussed before, penalty equal to 50% of the value of goods or 200% of the tax payable on goods, whichever is higher needs to be paid. in most cases, the owner does come forward to collect the goods. Therefore, the important provision that you have to remember now is that the penalty applicable is 200% of the tax payable, as against 100% of tax and penalty, which was applicable prior to January 1, 2022. I hope the penalty provisions are clear. The provisions as is have been displayed on the screen for ease of reference. One other important amendment that also happened effective January 1, 2022 is that there have been timelines that have been prescribed for issuance of notices and to conclude the cases of detention of goods as well as the conveyance. Earlier, there was no timelines prescribed, as against now, the e-way bill officer is required to issue a notice within 7 days from the date of detention, and thereafter he has 7 days to adjudicate the matter and issue an order, against which you can of course go on appeal. So therefore, the detention cases, the officers have been given a timeline of 14 days so that they can conclude the matter and release the goods as well as the conveyance in case the penalties have been paid. Stressing on the point, 14 days, the goods will be released and the conveyance will be released if the penalties prescribed that have been displayed on your screen are paid. What happens if the owner or the transporter does not come forward to pay the penalties? Then, in that case, after 15 days, the e-way bill officer has the provisions on his side to sell the goods as well as the conveyance to recover the penalties. If the owner does not come forward, even in those cases, now post January 1, 2022, the transporter has been given an option wherein he can pay up 1 lakh rupees and get the goods conveyance released. Apologies. If he pays 1 lakh rupees, the transporter, then he can get the goods released. This is the first topic that we seek to cover here, section 129, the penalty provisions. The second topic that we're going to discuss is whether these penalties are required to be paid in case of all non-compliances with respect to e-way bill. And in that context, a circular has been issued, Circular 64, back in 2018, wherein it mentioned that in case there are any minor errors, the errors that have been prescribed on screen come from the circular. The 6 scenarios have been mentioned in the circular, wherein if these 6 errors, these are basically very minor errors, there are spelling mistakes or error in mentioning the document number or vehicle number. In all those cases, concession has been given wherein the penalties under section 129 that we discussed in previous slide are not required to be paid, and the goods will be released in case you pay a nominal penalty of 1,000 rupees. 1,000 is including CGST and SGST. If you pay up 1,000 rupees, your goods will be released. The question that arises is whether this circular, the benefit of this circular, would be restricted only to these 6 scenarios that have been mentioned on your screen, or it goes much beyond these 6 scenarios. And in this context, it is very important to understand that the courts, various courts have held that the 6 scenarios mentioned on the screen are not just restrictive, and the courts have taken a liberal interpretation, and they mentioned that the benefit of the circular will have to be passed on to all such cases where the errors are very minute or there is no much of tax impact. In those cases, the courts have taken a liberal interpretation, and if you pay a penalty of 2,000 rupees, the goods will be released. All these topics have been covered at length in our e-way bill book, which is titled Madhukar Hiregange's Practical Guide to e-way bill under GST. I am one of the co-author along with CA and Raghunandan. We have written this book so that it helps the readers to get ready knowledge with respect to e-way bill provisions, and various aspects have been covered. Some of the key aspects that we have covered in this book are what was the importance of e-way bill, how did it come into picture, what was the need for raising a e-way bill. We've also discussed about state-wise requirements, when was it introduced in each of the states, and what is the exemption limit for each of the states. Like Bihar and Maharashtra, the limit for raising a e-way bill is 1 lakh, as against in Karnataka it is 50,000. So there have been exemptions that have been given by state governments. Different limits have been prescribed by different state governments. All those have been captured readily in the e-way bill book that I've just displayed on the screen. We've also decoded what does the e-way bill dashboard have? What are the options that have been given to the taxpayer? How can a taxpayer register on the portal? Various taxpayers are there. Some registered, some unregistered. How can they raise an e-way bill? All those have also been discussed. We've also given scenarios. Various scenarios have been enlisted, and how does e-way bill look like in those scenarios have also been discussed. What happens if you are selling certain goods and transporting it to somebody else? Bill to ship to scenarios have been covered. What happens if it's a warranty sale? All those aspects have been covered in the e-way bill book. And also we've also discussed at length on various rulings, including the cases that we discussed before on nominal penalty of 1,000 rupees. All those cases have also been covered in our e-way bill book. You may refer to this book, which is available on Amazon. In case you need any assistance with respect to purchase of that book, you can contact us at any time. We'll be happy to answer. We'll also be happy to answer any of the queries that you have with respect to e-way bill provisions. Thank you all.